What's up, millennials? In this video, we're going to take a look at the valuation of Li-Cycle, which is a company that's going to be acquired by the SPAC that's trading under the ticker symbol PDAC. Now, this video is a little bit different from the other valuation videos because this is a valuation I did during a live stream. So I'm going to elaborate a little bit more on the terms that I'm going to use. Enjoy. So I didn't really do a lot of preparation for this valuation because I just wanted to do it live with you guys and girls. Are there any girls in here? Any women? I'd like to know. Because about 10% of my viewers are actually female. So I wanted to do this live with you. I did a little bit of preparation just to see if everything works okay-ish, and I think it should be working okay-ish. So PDAC is a battery company. Yeah, as I said, I haven't done any additional research about this company. But it's like a recycling, like a battery recycling company. Just like we see over here, a sustainable lithium-ion battery recycling company, which is the missing battery supply chain step. Okay, well, they think that they are in the middle of everything in the EV revolution, the ESG goals, and the domestic supply of strategic materials. Let's see if we can find anything interesting happening over here. Yeah, usually what I do is just scroll very quickly through the presentation just to see what kind of things they want to tell us. Because I do kind of think that often these investor presentations are a little bit like, yeah, a little bit like marketing almost, if you will. They try to attract you to this SPAC, as is still my opinion. So they say there's a lot of battery waste right now, and they probably want to fix that. In 2050, we all want to be net zero, so that makes sense, of course. Headquartered in Toronto. Oh, really? Okay, that's interesting. Not sure how international they are, of course, but that's probably somewhere in the investor presentation as well. Yeah, but of course what we are going to focus on a little bit more is the actual valuation. Look at that. So, okay, they're talking about regulation. So they're talking about the US, Canada, China recovery rates. That's probably recycling recovery rates. European Union doing its things as well. That's all good. Look at this guy, Andrew Cuomo. Are people still upset with this guy? I mean, I watch Anthony Pompliano's podcast, or podcasts like news every day. I think he's quite upset with this guy. Yeah. Okay, financial overview. Here we get some interesting stuff going on. Here we have the revenue and the EBITDA, or EBITDA, whatever you want to call it. I'm going to try to call it EBITDA, or, well, it doesn't really matter, of course. I even did a poll about this. Most people say EBITDA, some people say EBITDA, and some people get really upset when I say EBITDA, and it should be EBITDA, so yeah. But you can see that in 2021, they have just not a lot of revenue just yet. They do expect to grow that by quite a bit in the next coming years, and by 2025 they expect, and of course expect, as I say in almost all my SPAC valuation videos, is a very, very important word, because yeah, you'd never know what is exactly going to happen. But yeah, they expect to scale from $12 million in revenue in 2021 to $958 million in 2025. So that's almost, that's only about 4 years time, of course, with a nice compound annual growth rate, a CAGR, as they beautifully say, of 82%. Then we can see their EBITDA over here, growing from -6 million in 2021 all the way to 541 million in 2025. So that actually means they have a pretty large EBITDA margin as well, 56% in 2025. EBITDA margin meaning the percentage of EBITDA compared to the revenue, and 56%, as far as I know, is pretty high. So that's pretty cool. That's pretty cool. That usually gives them quite a lot of room for, yeah, just to have money left over at the end of the month, eh? And also for us people. Let's see, Lilium also rumored with going public. I don't know what Lilium is, to be honest. What's up, Tom? Lilium. Let's just write it down. Ooh, Gina, female, let's go. Susan, let's go. Look at this. We got 2 women out of 22, which is 10%. Well, that's exactly my the rate right now. I actually really love to see women in this space, and it's actually one of my long-term goals, by the way, to have basically everyone investing, and especially women as well, because I think women not investing is simply making us have this gender gap making it bigger and bigger, you know what I'm saying? Basically meaning that men, when they invest, well, they're going to grow their wealth faster and faster, whereas women, if they don't invest, they're going to stay at the same amount of money. So it's great to see Gina and Susan in here and actually getting more knowledge about this stuff. That's great. Thank you for being here. Anyways, let's get started, shall we? PDAC Li-Cycle. Let's actually bring up my valuation sheet. Let's get rid of this. Let's pull up PDAC over here. Let's make this a little bit more like this. Very pretty. All right. So let's zoom in a little bit here so everyone can hopefully see a little bit better. What they usually do is they start out with a share price of $10 per share, right? If you know a little bit about SPACs, you might already know that. Most, like 99% of the SPACs start trading at $10 per share. And SPACs also usually don't go lower than $10 per share because before the merger is completed, you can actually redeem your shares for $10 per share, which basically means that you can turn in your shares in exchange for $10. So you basically can sell your shares at all times at $10 if you would like to. So that usually means that a $10 per share is the minimum that the share is going to start trading at. $10 per share. Again, I'm a little bit tired today, so I'm sorry if I'm speaking very weirdly today. Companies SPACs like PSTH, for example, starts out at $20 per share. But yeah, again, like 99.9% probably of the SPACs are actually starting out at $10 per share. Anyways, they say that they're going to have about 167 million shares outstanding after the merger, which is very important to note. After the merger, pro-forma basically means after the merger. Here you can see the equity value is, well, $1.665 billion. And the equity value basically means the same thing as the market cap. Right, so you probably know what a market cap is. It's basically just the price per share multiplied by the amount of outstanding shares. And in this case, if you do that with $10 per share and you multiply it by 167 million, you're going to arrive at this market cap after the merger of $1.665 billion. Okay, here they say 167 million shares outstanding. Well, it's probably going to be 166.5 million shares outstanding, but they of course rounded it up to 167 million. So I just took the liberty, if you will, of putting, instead of 167 million, I put in my Excel sheet 166.5 million to arrive exactly at that market cap of 1.665 billion. Okay, so based on a share price of $10 per share, the market cap of this SPAC, well, not of the SPAC, of the company actually, that is going to be acquired by the SPAC, so Li-Cycle, is going to be $1.665 billion, okay? Then you have also a difference between the equity value, so again, that's the market cap, and the enterprise value. The enterprise value basically means the value of the company, so how much the company is actually worth. The difference between the market cap and the enterprise value, so between the equity value and the enterprise value, is the amount of cash they have. Sometimes it's debt, sometimes it's cash. In this case, they're going to have a positive amount of cash on their balance sheet of, as they call it, $566 million in cash on their balance sheet. So then you can do something else. You can say, okay, so the market cap is 1.665 billion, right? If you take off the amount of net cash, which is 566 million, you're going to arrive at this enterprise value of $1.099 billion, which is also the number that is presented over here in the investor presentation. So then you can say, okay, based on a share price of $10 per share, this company, Li-Cycle, is worth about $1.1 billion. Very well. So that's basically the first step that you need to go through. Let's see if we have any questions so far. Yeah, I'll check out the comments probably later on. I'm just now going to go through the evaluation. Okay, so when we've done this, we can say, okay, $10 per share, very well. But if we go into TradingView, for example, and we take a look at the current price of this stock, we can see that it's currently trading at $13.49. So that's the number that I put over here in the price under now. And that means if we go and make this a little bit bigger, the price has gone up from $10 to $13.49. So that also means that the market cap is going to go up from this number, $1.665 billion, to this number, $2.246 billion, okay? So based on the current price per share, Li-Cycle has a market cap, a pro forma market cap after the merger of a little bit more than $2.2 billion. Very important, because sometimes you might say it's way lower because the SPAC has a low market cap of maybe, I don't know, 300 million. And some people say, well, this is just a company of 300 million, but no, you always need to take a look at the total amount of outstanding shares after the merger, and then you're going to arrive at this market cap of 2.2 billion, okay? So then again, if you go to the enterprise value, you simply take this market cap of 2.2 billion, you subtract the amount of net cash of 566 million, and then you're going to arrive at this enterprise value of $1.68 billion, okay? So based on a share price of $13.49, the company, pro forma, after the merger, is worth $1.68 billion, right? Hope everything is clear so far. Very well. So if we've done that, then we can actually go to the next step, which is to go to the pro forma, or sorry, to the, actually I need to say something different, which I almost forgot. So we said that pro forma, there are going to be 166.5 million shares outstanding, right? But if you go to, let's see, can we see it here? No, they actually don't mention it. I think they do mention it in the case of a Microvast. Sometimes, and that's probably also going to be the case of Li-Cycle, there are going to be warrants outstanding. Warrants are options that can be converted into shares at a later point. Don't ask me a lot about warrants because I don't know enough about warrants, but I do know that usually what happens is that if a SPAC, or sorry, if a company that is acquired by a SPAC trades above like a certain threshold, usually I think it's $18 per share, during a period of like 20 trading days out of 30 trading days, more or less, after the merger, then people are allowed to trade their shares into, or sorry, the company actually has the option to make people exercise their warrants. So basically the company says, okay, now you need to take your warrants and you need to convert them into shares. People can also decide to convert those warrants into shares themselves. Basically, not whenever they want to, but I believe like after 30 days they can do that whenever they want to. All of that, what that means is that the amount of pro forma, or the amount of shares outstanding after the merger, could actually be higher than the number that's over here in the investor presentation. You also have something else, which is called earnout shares, which I believe, I'm not sure if this is new or if SPAC started adding this, but I think that based on a certain threshold, a certain price level, the company can actually issue more shares as well. So usually when the company, or when the stock is trading above, like let's say $15 per share, the company can actually say, okay, now we're going to issue 10 million more shares, okay? So that means that the amount of outstanding shares is not necessarily 167 million. It can go up, it can also go down, but usually it goes up, right? Usually it goes up. So you need to take that into account as well. And I find it honestly very difficult to determine the correct amount of outstanding shares after the merger as well. I suppose they're going to be disclosing that in their SEC filings. So yeah, I'm going to pay attention to that, especially with Switchback Energy, which is going to have it's another vote on this Thursday. And I'm going to see how many shares there are going to be outstanding to see if there's like a major difference between that number and the number in the investor presentation. So that's just a little side note that I want to talk about. Very well, let's go back here. Okay, no questions so far. Very well. If you have any questions, let me know, by the way. Huh? Okay, so let's actually go now to the future enterprise value. The future enterprise value. And we kind of need two numbers for this. First of all, we need an EBITDA or a revenue number. For this SPAC, PDAC, which is going to merge with Li-Cycle, we are going to be using the EBITDA numbers. We're also, apart from that EBITDA number, so simply the amount of EBITDA in a certain year in the future, we're also going to need a certain multiple to apply to that EBITDA. I'm going to explain a little bit more about that later. So let's first talk about that EBITDA, okay? And I believe we've already seen that number. Let's see if we can find that number over here as well. No, I don't think it's over here. So for today's valuation of Li-Cycle, we are going to be looking at the numbers of 2024. 2024. So we're also going to be looking at the EBITDA of 2024. Now, let's first go back here. Let's zoom out a little bit. Let's find the EBITDA. We were already looking at the EBITDA before. It's over here. Very well. So here we can see the EBITDA, or well, the expected EBITDA, of course, of this company Li-Cycle in the future. In 2021, they expect a negative EBITDA of -6. 2022, positive of 3 million. Then it goes up to 109 million, 339 million, and in 2025, $541 million. Very well. So as I said, today we're going to be looking at 2024 numbers. That's just because they chose to take that number into their calculations. So we're going to be looking at the EBITDA of 2024, which they expect, and of course expect is an important word there, they expect to be $339 million. Okay, so that's also the number that I put over here in my Excel sheet, and this is actually the little upgrade that I did in my own Excel sheet. So you can just plug this in over here. If you don't have this, then you can just remember it for now and use it later on. So the EBITDA we're going to be working with is 339 million. So that's the first one that we're going to use, the first number we're going to use. Now the next number is an EBITDA multiple. Let's see if we can explain what that means basically while I take a sip of my water. Let's say you have a company and the company is worth $1 billion. So an enterprise value of $1 billion. Let's say their EBITDA in a certain year is 50 million. Okay. So again, let's actually pull up a calculator. So let's say you have a company that's worth $1 billion. And let's say they have an EBITDA of 50 million. So that means if you take that enterprise value and you divide that by the EBITDA, you're going to arrive at 20, which is going to be called the EBITDA multiple, right? So if you have an EBITDA multiple of 50 million, if you have an EBITDA of 50 million and you have an EBITDA multiple of 20, then your enterprise value is 1 billion, okay? So I hope that explains more or less what an EBITDA multiple is. So what we are going to be looking at is the EBITDA multiple of Li-Cycle, and we're going to compare that with the EBITDA multiple of other companies out there. Very well. So as we can see in 2024, which is the year we are going to be looking at, Li-Cycle's EBITDA to, or EV to EBITDA ratio rather, is 3.2x, right? Because we said that, well, the enterprise value, or sorry, the EBITDA was 339 million. And if you multiply that by 3.2x, you're going to arrive at this enterprise value, which is more or less the same as we have been seeing in the pro-forma enterprise value. Exactly. Okay, so 3.2x for Li-Cycle in 2024. Is that a fair one? Is that a low one? What should we be looking at? Well, the thing is, we don't know exactly what is going to happen in 2024, of course, but we can see a few things. We can see, for example, that they say that electrification facilitators in 2024 are going to be having an EV to EBITDA multiple of 10.9x. They say that disruptive battery EVs are going to have a multiple in 2024 of 6x. They also say that if you look at the current year, so 2021, battery manufacturer, I can't speak anymore today, I'm very sorry. Battery manufacturers, okay, very well, in 2021 have a multiple of 21.4x. Waste management and recycling providers in 2021 have a multiple of 16.1x. And lithium producers, they in 2021 have a multiple of 35.9x. So now the question is, what is a fair multiple to have for a company? It's very difficult, right? Because here you see multiple of 6x, 10.9x, 16.1x, etc., etc., etc. So it's very difficult to come up with a fair multiple. Well, you can see that these companies these companies and sectors in 2024, 2022, the median multiple here is 15x. It's not entirely fair because they look at 2022 and 2024, so yeah, it's not entirely fair. And here, if you look at 2023 and 2021, the median would be 21.4x. Now they say, okay, if you look at these multiples, they say, well, maybe for our own company, a fair multiple would be 20x to 2020x. I'm not entirely sure. Sorry, I'm not. A 20x to 22x, rather, yes. So I'm not entirely sure if this is a fair range of multiples, to be very honest with you. It could be a little bit on the high end, especially if you look at the disruptive battery EVs, for example. I suppose this is like just EV companies, of course. They have a rather lower multiple compared to the 20 to 22x range we've just been looking at. But on the other hand, if you look at lithium producers, they have a quite high multiple of 35.9x. So you could actually say, yeah, sure, that makes sense. And if you look at battery manufacturers, well, in 2021, they have a multiple of 21.4x. So you could make a case that a range of 20 to 22x is actually fair. That could be the case. So I'm actually wondering, what do you think? Do you think that these multiples are justified or not? Because I think I already see a question about that. Let's see. Why do some companies have much higher multiples than others in the sector? Exactly. So yeah, that is a little bit different, right? Difficult. I would say that usually if you are just looking at the same sector, there are certain companies that are simply bigger, that have maybe higher growth, that have maybe, I don't know, better management or whatever. People don't just look at the multiples, of course. They also look at other things, right? If you compare, I don't know, Tesla versus Volkswagen, people are going to be looking at Elon Musk and say he's a great CEO, and whereas they might not find the CEO of Volkswagen all that great. So they're not going to be looking at just the multiple, of course, but that does actually mean that the enterprise value of Tesla is going to be way higher compared to Volkswagen, right? That also means that, well, you could have a way higher multiple for Tesla compared to Volkswagen. Hope that's more or less, an answer to your question. Also, why do different companies show the multiples in a specific year? In this case, why did they choose 2024? Yeah, very good, good question as well. So with regards to the multiples, and let's actually go back to this over here. You can't really use the numbers of 2021, for example, in this case, because they simply don't almost have any revenue. As we can see in 2021, they're only going to have $12 million in revenue. And the EBITDA in 2021 is going to be -6, okay? So you can't really do a lot of calculations with that, especially because it's a negative number. In 2022, well, it's still a very low number as well. So if you want to do calculations with an EBITDA of 3 million, it's going to be quite difficult as well. So in this case, what Li-Cycle says is, okay, you know what? Right now, we don't really have a lot of revenue. Therefore, we don't really have a high EBITDA either. What we are going to be looking at is the future. So why did they choose 2024? Well, yeah, maybe they could have also looked at 2025, but I suppose that's because they looked at the other companies. They looked at these companies out here, and they saw more numbers for comparable companies in 2024, and they didn't really find the numbers for 2025. That could be one of the reasons, right? I'm not sure if they actually mention any reasoning for using 2024 instead of 2025, but it does make sense that they do look at 2024 and 2025 instead of 2021, 2022, 2023, okay? And this is also probably where the company gets a little bit more stable compared to the compared to the earlier years out there, okay? So I hope that makes a little bit of sense as well. Okay, so I hope you believe that this is a fair range of multiples. If you think this range of multiples is too high, you can of course change that. You can of course say, well, if you look at these multiples, maybe, I don't know, 15x to 20x is a more fair multiple range. That could be the case, but that is for you to decide. The company decides, okay, we're going to be using a range of 20x to 22x. Very well. So we're going to be working with that as well. Okay, so we have an EBITDA of 339 million in 2024. We have a low multiple of 20x. We have a high multiple of 22. The only thing you now need to do is simply take that EBITDA and multiply it by the low multiple and the high multiple. Well, if you do that, let's also pull up the calculator to make sure that the Excel sheet does it correctly. If you take 339 million and you multiply that by 20, you're going to arrive at this enterprise value of $6.78 billion. Okay, that is also the number over here in the Excel sheet. Very well. And let's now do exactly the same thing for the high multiple. So again, we have that EBITDA of 2024 of 339 million. We multiply that by 22. And you're going to arrive at an EV, an enterprise value of $7.458 billion. Okay, so right now we already have these enterprise valuations, and let's actually go here. We can now also say, okay, we have a low enterprise valuation in the future. Remember, this is in 2024 of $6.78 billion, and a high multiple, a high valuation of $7.458 billion. You can now also say, okay, the midpoint valuation, which is basically going to be the average between these two numbers, is going to be this number over here, which is just the average number between these two numbers. So the midpoint future enterprise valuation would be $7.119 billion. Okay, again, that's for 2024. So that's the first step that one of the most important steps we need to take into account. And again, keep in mind a few things. Let's actually go back here. Let's go here. So for the valuation, or for reaching a fair multiple, we were taking a look mostly at 2024 of Li-Cycle and 2021 of battery manufacturers, these companies and these companies. Okay, so there's a discrepancy between these 2 years: 2024 for Li-Cycle, battery manufacturers 2021. So that means we're not looking at the same years, and that means we now need to discount the enterprise value back to the present. Okay, it's a little bit difficult to actually explain that with words. Usually when I write it, I more or less know how to write it, but when I say it, it's very difficult to actually say it. But basically what you need to take into account is that you're looking at 2024 Li-Cycle and 2021 battery manufacturers. Since there's a discrepancy between these two numbers, you need to discount these numbers, these enterprise values, back to the present. Okay, and now we're going to do that. So we have these enterprise values in 2024. We're now going to discount that back to 2021, which is the year we are living in. How are we going to do that? Well, there's a simple formula for that. First of all, when I do that formula, let me give you a small example. Let's say, again, you have that company of $1 billion. Let's say this company grows at 20% each year. 20% each year. How large would the company be after 5 years? Well, you can simply take that enterprise value of 1 billion and you can multiply that by 1.2, right? So after 1 year, it would be worth 1.2 billion. After 2 years, it would be worth 1.44 billion. Then this number, then this number, then this number. So after 5 years, your company of $1 billion right now would be worth almost $2.5 billion. Okay. Well, with Li-Cycle, what we've just done is we right now know the future enterprise valuation. So we basically know this number, right? We know the 2.5 billion number. We now want to know what is the current enterprise value. So we want to know what is the 1 billion number in this lame example that I just gave you. How do you do that? Well, what you can do is you can simply discount it back in time. You can simply take a certain discount rate. In this case, we're going to be going with a discount rate of 20%. And then we're going to arrive at a current enterprise value. If you would do that for this just simple example that I just gave you with the $1 billion company, well, you can simply divide it by 1.2, right? This would be the number in the year 4, year 3, year 2, year 1, year 0. So again, now you can see that we've gone from the future enterprise value back to the current enterprise value. We're going to do exactly the same thing for Li-Cycle as well. So first of all, we saw that for the low valuation, the enterprise value is $6.78 billion. I'm not going to put in all the zeros because this is actually enough. And we can now do that with a discount rate of 20% for a certain amount of years back in time. We said we have been taking a look at the year 2024, which is 3 years away, so we need to discount it back 3 years in time as well. And we're going to use a discount rate of 20%, which is very common with SPACs. You can make that higher, you can make that lower, but usually with SPACs, people do use a discount rate of 20%. So if you do that, if you divide this by 1.2, and you do that 3 times, because we needed to go 3 years back in time, you're going to arrive at this number over here, which is 3.92 billion. Let's see if this is also the number over here. Yes, it is. So the Excel sheet agrees with us and says, yes, that's exactly the discounted enterprise value. So according to the low multiple we've been using in the previous step of 20x, Li-Cycle currently, after the merger, would have an enterprise value on the low end of $3.9 billion. Okay, let's do the same thing for the high valuation. So let's say, again, the high valuation was 7.458 billion. Well, we can do exactly the same thing. We can divide it by 1.2, and if you want to go a little bit faster, instead of just hitting enter 3 times, you can also do this to the power of 3. Make sure to use parentheses, and then you're going to arrive at the same number, $4.316 billion more or less, which is also the number over here in the Excel sheet. So now you can also say, okay, we have these 2 discounted current enterprise values, well, after the merger. Then you can also say, all right, the midpoint valuation, which is simply going to be the average valuation between these 2 numbers, between the low multiple and the high multiple, or the low valuation and the high valuation, is going to be $4.12 billion. Right? Because that's simply the average of the low one and the high one over here. $4.12 billion. Very well. So now we know the enterprise value of Li-Cycle after the merger. We, in the end, of course, want to know the fair price per share. Well, in the beginning, in one of the first steps, we said that there's a difference between the enterprise value and the equity value, or the value of the company and the market cap of a company. And the difference is the amount of cash on their balance sheet. We said that, well, a market cap basically consists of 2 things, cash and enterprise value. Well, with that knowledge, what we can do is we can take this enterprise value, we can add the amount of net cash, and then we would arrive at a market cap, right? So if you do that, if you take all these enterprise valuations for the midpoint, the low valuation, and the high valuation, and you add the amount of net cash, which is the amount that they're going to have on their balance sheet, $566 million, you're going to arrive at these fair market caps, if you will. So for the low end, you're going to arrive at this number, 4.5 billion more or less. For the high end, it's almost 4.9 billion. And for the midpoint valuation, it's almost 4.7 billion. Okay, so you have these market caps. Now, the only thing that you need to do to arrive at a fair price per share is to take those market caps and divide them by the amount of outstanding shares. Well, at the beginning of this valuation, we said that there are going to be 166.5 million shares outstanding after the merger. You have these market caps. You can divide them by the amount of outstanding shares, and then you're going to arrive at these prices per share. So again, for the low valuation, we set market cap 4.5 billion, 166.5 million shares outstanding. That is going to give you a fair price per share of $26.96. For the high valuation, you would reach a price per share of $29.32. And for the midpoint valuation, that would be $28.14. So again, based on the EBITDA of $339 million in 2024, based on a range of multiples, EBITDA multiples of 20x on the low end, 22x on the high end, you're going to arrive at these fair prices per share. again, keep in mind assumptions, right? As I always say in all my videos, all my SPAC valuation videos, we are always taking a look at assumptions. You don't know for sure this company is actually going to go to $700 million in revenue in 2024. You don't know for sure that in 2024 they're going to have $339 million in EBITDA. You just don't know. And also the multiples, maybe this is one of the worst companies out there. Maybe this doesn't deserve a multiple of 20x to 22x, right? Maybe this is one of the worst companies out there and they only deserve a multiple of 6x, okay? Or maybe this is one of the best companies in 2024 and they deserve a way higher multiple, 36x. Who knows? Who knows? So it's really difficult to come up with a fair multiple. That's probably one of the most difficult things. Because let's go back to the sheet. Let's just, instead of using a low multiple of 20x, let's use a low multiple of 15x. And let's use a high multiple of, I don't know, 17x. Well, your fair midpoint price per share is going to go lower to $22.25. And before that, that was actually, let's see, $28. So there's a difference of almost $6 per share if you change those multiples. Also, if you don't have this EBITDA, if they don't achieve an EBITDA of 339 million in 2024, maybe, I don't know, maybe they're just doing very horribly and they only achieve an EBITDA of 200 million. Well, then your fair price per share is going to be only $18 per share, a fair midpoint price per share, instead of that, $28. So there's a $10 difference per share. Also, another factor that could be important as well to note is the amount of outstanding shares. I said that because of warrants, because of earnout shares, because of share dilution, because they are going to issue more outstanding shares, right? They could raise this amount of shares from 166.5 million shares. Maybe they go all the way to 200 million shares. Well, then your fair price per share is also going to drop $5 per share. We went from $28 per share, now we are at $23 per share. So there are just a lot of factors that are going to change this calculation, okay? The amount of outstanding shares is going to matter, the amount of net cash is going to matter, the EBITDA or the revenue you're looking at is going to matter, the range of multiples is going to matter. So there are a lot of variables that have an impact on the price per share, on the fair price per share of this company. I hope that makes sense, okay? But that's something very important to keep in mind. Because, yeah, it's just, again, SPAC valuations is not just a holy grail you can always use, you can always reference to. It's going to change over time as well, right? Again, if Li-Cycle turns out to be the worst company ever, valuation is going to be lower. If Li-Cycle is going to be the #1 in battery recycling, it's probably going to be higher. So yeah, I hope that I have made my point clear.